Hey guys, welcome back to T2SMC Trader. I believe that everyone is cool. So today's weekly analysis video is gonna be a little different. Me and my friend Outlander is going to do that all together. I wanna listen from him first, then I will give my opinion over here. So I believe that this whole conversation will be helpful for you to do the weekly analysis. And obviously, don't forget about this. Weekly analysis is the base of trading. You have to make sure that you have done your weekly analysis in the weekend. So let's go to the video. Before going to the video, make sure that you have subscribed to our channel if you are not new, and don't forget to push the like button. So let's go to the video. Hey Outlander, how are you, brother?
Good, thanks, T2. Thanks for taking the time with me. I hope this will help everyone actually, because I'm a little bit not so great at the weekly analysis. So if I can explain it the way I see it, then maybe T2 can correct me and other people will get benefit as well, hopefully.
I wish to.
So yeah, so basically, we have a lot of news during the week. On Monday, we have the PMI, which is whatever that is. And then Tuesday, core sales. Wednesday, the FOMC, the big one, federal funds rate, that's the huge one. And then Thursday, the final GDP, I'm not sure how important that is, but unemployment claims, the red folders. And Friday we have news as well. So basically every single day we have news.
Okay, so in my thinking that every day will be a good day to trade, in my opinion. What do you think about that?
That sounds great. Yeah.
Yeah. So
we'll have some volatility.
What do you want to give your most focus in this week? All of this news, where should be your most focus area? What do you think?
Probably FOMC on the Wednesday.
Absolutely.
Yeah.
I'm also thinking like that way.
Maybe these other 2 days, Monday, Tuesday, might be just trying to make some mess for it to take for the FOMC.
But
putting it in the position, maybe, I'm not sure.
For FOMC, I think that FOMC will take the Wednesday morning session to make the liquidity for him. It's my opinion. Okay. In Monday and Tuesday, I'm thinking that Monday will be like highly volatile accumulation. In Tuesday, it will be a perfect highly volatile manipulation. And Wednesday will around the morning session, it will make the liquidity for FOMC, and around 2:30, it will go toward that FOMC. I mean, that
sort of based on, I'm thinking sort of Monday, like you said, consolidation, and the Tuesday rip down, and then Wednesday go up and make a whole new time high, a new all-time high. I would imagine.
We'll see that after observing our calendar, actually.
Chart.
I mean, sorry, our chart. Yeah.
Okay, so here I have the Dixie US dollar. This is the weekly chart. So on the weekly chart, get rid of that. I think that's an hourly. I'll find out later. But anyway, so we've basically been in this consolidation for a few weeks. We've just taken all this liquidity up here, tapped to this weekly fair gap. Okay, so it wouldn't surprise me if it comes up a little higher to around the 50% level, and then down. Okay, so based on the weekly.
You are targeting for the sell side liquidity, right?
Yes, I'm thinking come down for this liquidity down here.
Okay, it's your long-term idea. What about the short term? I mean, the next weekly candle. What about that?
Next weekly candle. Okay, so what's happened? This has created an order block here. So this went down, came back up to trade this order block. So it's probably traded the 50%.
Yeah, it has traded the 50% of that order block.
Okay, so from here we can, if we get some sort of indication on the daily, maybe it's going to come back down then. Can I go daily now?
Okay, so you are thinking that if it can, I mean,
hold this order block.
I need something like perfect over here. For example, if it break that 50% of that order block by Monday or Tuesday, are you thinking that it is going for the 50% of that weekly bearish gap?
Yes, if it breaks this order block, that will be the next target to the upside.
Okay. On the other hand, if that order block hold the price, then you are thinking that market can go and fall little lower, right?
Yeah. We have this weekly fair value gap here, which can be potential draw, I guess.
Okay. Yeah.
Yeah, that's basically my feeling.
So yeah, in short, that if that order block hold the price, then it can fall for that weekly bullish fair value gap, that small fair value gap. And if the mean threshold is not broken, if the mean threshold of that order block is broken, then it can reach for the 50% or maybe much more higher of that weekly bearish fair value gap. Okay, that's clear.
Yep.
That's clear.
Does that make sense?
Yeah, absolutely. 100%. Let's go to the daily chart.
Daily chart. I can get rid of these. Okay, daily chart gives us more information. Okay, so basically what's happened here, we've come up, we've taken all the liquidity, again, trading this order block through here. So we're holding the daily order block here. So again, yesterday closed like a bit of a doji candle, I guess, a bit indecision. So it's thinking about changing direction here to go back down again. I think this was just coming up to trade this order block. And then we're heading down this way.
Okay. So what do you think about that, daily chart which has taken the liquidity and trade the daily bullish fair value gap? What do you think about that? The red line. Yeah. What do you think about that? I mean, it has taken the liquidity, trade that bullish fair value gap. Yeah, that bullish fair value gap has been traded. Now market is going higher.
I'm thinking it's a reaction to bring it back for this order block.
Okay. No, I'm just asking about the probability, because this weekly analysis is all about the probability. Do you think it can happen like market has taken that liquidity, now it is going to break through that order block and going for the buy side liquidity? That means the high, you can see over here right now, the high, it has made an obvious liquidity. Yeah. That has made the obvious liquidity with previous high.
But sort of closed above it.
No, not that one. Before that. I mean, can you little skewch? More. Yeah, there is a high. Can you see that high?
This one here.
Yeah. Can you please mark that high? Yeah.
Yep.
Please extend.
Oh, yes.
Yeah. Yes, what do you think about that buy side liquidity?
I didn't see that high, to tell you the truth.
Oh, okay.
That's obvious liquidity. So yes, it's tapped this. Market structure shift, fair value gap can continue up. So based on the market structure shift, liquidity taken, traded a high time frame PDRA, they could possibly come back here and then go up for this.
Okay, so this is also a good possibility, right?
Yeah. So it could come up there and then trade the 50% of that weekly, or there's probably a daily order block here, a fair value gap here.
Daily fair value gap, yeah. We have the daily fair value gap as well over there.
Yep. So that makes sense that it could come up here to trade that. Possibility. That's probably a better possibility.
Okay, so there is a possibility that market can actually go higher as well. So all we have to do is we have to wait for Monday and Tuesday to see, is it actually going to break that order block or not. If it breaks that order block, then it will go for that fair value gap with that buy side liquidity. And if it failed to break that order block, instead going higher, if it is started to show us some kind of intention to fall, then it is possible that market will fall for the either the last fair value from the daily chart or the that weekly bullish fair value, whatever it is. That's perfect. I mean, that is all my understanding.
If you combine that with the news, I'm guessing like maybe the news can actually whip it up to here, take this, and then push back down on the Monday. So this is part of the consolidation. So whether it just does this on the Monday or it takes this and then consolidates, I'm not 100% sure yet.
Okay, so this is all the possibility, but we are going to know that what is going to happen. I mean, what is our level actually, right? If that order block is broken, then where should be our target? If that order block is holding the price, where should be our target? Because we have both obvious sell side liquidity and both obvious buy side liquidity.
Yeah. So holds the order block, we're heading down here. Breaks the order block, we're heading up here.
Yeah, absolutely. Perfect. Okay. Can you please go to the next time frame?
4 hour. These lines are my new day opening gaps and stuff. I have a but so on the 4 hour, what have we done?
What do you
We've
see? This is the volume balance or new week opening gap. Can you please extend it to your right?
It's actually a fair value gap.
Oh, okay. There is also the
And also a volume imbalance. Yeah. So it's closed above that volume imbalance. This candle here has completely closed this fair value gap, so I'm not sure if that's still valid or not, this fair value gap.
Actually, it didn't close. It opened over there. So it's a liquidity void actually. I mean, some kind of. So closing the candle and opening the candle, you know, the difference. So it opened there. So either way, that is the, liquidity area.
Avoid.
So, yeah. If you take a closer look, it has traded if you just mark the gap perfectly, you will see that. Can
it's a small space.
Yeah, the lowest price should be that candle open close. The previous before candle on your right. Below.
Below?
On your right.
This one?
No, not after that. After that.
This one?
Yeah. That candle close. Can you please mark until that candle close? Yeah, and extend. Yeah. Absolutely. Over here.
So it's basically traded the 50% of that area.
Yeah, because you have to what to say, resize the high as well. High is at the opening. High of the gap to that candle open. No, that is the low of that gap. I'm talking about the high of that gap. High. Yeah, just correct it to the open, exact open.
Here.
No, not that candle open, brother. That candle open.
Right, this candle open. Oh, which is down here.
No, that is the closing. Open, exact open. Yeah, open.
There.
Yeah, absolutely.
Yeah.
If you put it over there, you will see that it has traded the 50% of that opening gap. Okay. So, what do you think? Is it possible that it will keep falling from 4-hour chart?
Yes.
And if it started to fall, where should be the liquidity? Where it should go?
Probably down here to start with.
That is a good area. That there is some kind of sell side liquidity, and also
the major liquidity is down here.
Down here, yeah, absolutely. There is the liquidity, and above there is some kind of obvious liquidity. Where you remember the daily candle took the liquidity, trade the bullish parameter. Yeah, that is also the obvious liquidity. So it's possible that that volume imbalance or the gap will actually hold the price and send it for that sell side liquidity from 4-hour chart. But everything is going to depend from the daily chart. If that order block is going to break, then market is going higher. If that order block doesn't break, then market can fall for this. From 4-hour chart, all I can see, this volume.
That's where I have a bit. Yeah, go on. Sorry. That's where I have a bit of confusion. So if we're waiting for the daily order block to do its thing, that's a whole day.
Absolutely. So you have to.
How do we know? We don't know, right?
Yeah, but now why this lower time frame is going to help you? Because from lower time frame, all you can see that this volume balance is actually holding the price. So if the 4-hour candle can volume balance constant and crossment or maybe to the top, then there is a possibility that market is actually going higher. That order block is going to be broken from daily chart. So we are going to pretend that even before it broke that daily order block.
We'll know in advance whether it's going to break.
Because we are in a lower time frame now. Because every move starts from 1 second chart, and then it effect to the weekly chart or the monthly chart. So the lower time frame start the move first in the higher time frame. So from 4-hour chart, that is all, I guess, in my opinion. What do you think? Is there anything else to explain?
No. This is the 1-hour chart now.
Yeah. Okay. So what do you think about the 1-hour chart?
1-hour chart, we've traded this. This is holding the price, this fair value gap. So again, it's also taken all the liquidity, created the liquidity here. Right? Obvious liquidity.
Yeah.
So again, it's basically see what happens, I think. I think if we can get a close below this fair value gap. That's already closed below, let's say, this fair value gap, then we can assume it's heading in our direction. So that will be holding the price, that order block on the daily.
Okay, yeah. And what do you think about the buying opportunity? How you will find that market is going higher actually?
If we break this fair value gap, come back, retap it, then we're going higher. If we close above here. But I'd be a little bit cautious because this is the hourly order block.
Mm-hmm.
So at the moment, the order block's holding it.
Mm-hmm.
So I'm a little bit scaredy cat, right? So I'd probably wait until it breaks this high.
Brother, that's the point. I mean, when I'm confused where it is going, you see how it is going to, I mean, how it is making so clear to you. If that happens,
Yeah.
I'll go for that. If this happens, then I'll go for that. What we have to do, we have to wait for that. Just to see that if that order block is going to be broken or not. If that order block is broken, I know that market is going higher. If that order block holds the price, market is going to fall. Simple.
Yep.
Okay.
So basically, we see what happens with this order block here on the 1 hour. If it breaks it, we're going up.
Yeah. So if I get the confirmation,
we're going down.
Yeah. If I get the confirmation from hourly chart, I don't even need to bother about the daily chart because we know that the daily chart is also going to be broken if this hourly order block failed to hold the price, right?
Yep.
Perfect.
Exactly.
Perfect. Okay. So is there anything you want to add?
No, I'm pretty happy with that, I think.
Okay. So you have an overall idea what is going to happen in dollar index, right?
Yeah.
Perfect. Then we can go to the NASDAQ chart.
NASDAQ weekly?
Yeah, absolutely.
Well, we're at all-time high on this weekly candle. Okay, we have an imbalance here underneath.
Mm-hmm.
So the weekly is not going to give us much. We have a fair value gap here on the weekly that could come back to if it changes direction, but that's a long way away.
Mm-hmm.
So I don't think the weekly is telling us anything based on this candle. It's taken previous day's high, previous week's high, a little bit of an indecision candle, so I don't know what to say on the weekly.
So
can you add to that?
You have to predict the weekly candle. I mean, what do you think after seeing this candle or everything? What do you think? What can happen exactly from the weekly chart? You have to predict it. You don't need to be right. You don't need to be wrong. All you have to do is you have to predict. What is your most, after seeing this chart, what do you think? What can happen? What is the best case of scenario?
Okay. I'll just do a scenario. So this is
propulsion block.
Propulsion block. Propulsion block. Water block. Propulsion block, I guess. It can come back and trade this at some stage. If you're looking at the price action, So we had liquidity. We created liquidity here. Didn't take liquidity.
Yeah, it's long.
Came up. But that's too far away.
Yeah.
So, and I think this gap could potentially be traded as well. This gap here. It's a gap here.
Now, I want to add one thing actually over here. When you are doing this NASDAQ chart weekly analysis, you have to keep that in your mind. Whatever you have predicted in dollar index chart. So if in dollar index you are predicting market will go higher, then you have to predict here that market will fall. If dollar index is going to fall, this guy is going to go higher. Think like that way. Okay, it doesn't need to happen, but you should think like that way. So in your dollar index chart, you saw that more probability that market will fall. You saw that from the dollar index chart. If that order block holds the price, and if that order block fail to hold the price, maybe market will go higher. And if dollar index go higher, then NASDAQ is going to fall, in my opinion. So do you really think that there is a possibility that this week market will trade that bullish fair value gap from the weekly chart for NASDAQ?
No, I don't think so. It's too far.
Okay, if it is too far and you're not thinking like that way, that market is going to fall for this sell side liquidity, instead it will keep going higher, then dollar index should, that daily bearish order block should hold the price for dollar index, and dollar index should keep falling, right?
Yes.
So
that's what I'm thinking.
Yeah. So when the market will open and you are seeing that dollar index is actually showing you the bearishness, at the same time this NASDAQ is also showing you the bearishness, you will start to think that actually market is making the buy side liquidity for later extended to the upper side of this NASDAQ, and it is going to happen in the time of FOMC, because FOMC is the most important news for this week.
Yep.
To understand the relationship between dollar index here and the news.
Yep, I understand.
Yeah, so you are not going to panic when you are seeing that dollar index is also falling, this guy is also falling, or maybe dollar index is going higher, this guy is also going higher. You don't need to get panic. You will start to look for your liquidity level, because you know when you are going to change the direction for dollar index. When you will change your dollar index direction, then this guy will change your direction as well. That means you are thinking that market will keep going higher, dollar index is also going higher. Around the FOMC news, still dollar index showing you the opportunity that order block didn't respect at all, so dollar index is going higher. So around FOMC, you'll start to think that okay, my bias was wrong, market is actually going to fall for that bullish fair gap or something like that.
Yep.
Do you understand?
Okay. Yep, understand. That makes sense.
Perfect. Let's go to the daily chart. Now, what do you think from the daily chart?
So we've swept both highs here. This orange line was one of my projections. So it's not really important. So we've taken liquidity, pushed up, pushed back down again, right? So I think because it's taken the highs, it needs to come down and take
some
the lows.
Some sell side liquidity.
Yeah. So I'm thinking lower run, which probably will happen Monday, Tuesday, like you said. And then Wednesday we get the proper move, which will be the upwards.
Okay, so if you're thinking like that, right, that Monday and Tuesday is gonna go a little lower, how far it can reach?
I think how far can reach? I think Monday, Tuesday will come down around here somewhere, and then Wednesday.
Brother, you have to think like logical way. I mean, it can't just reach until some random level. It has to reach for some specific level. Where is your specific level?
This low here.
Okay. Why is that your specific level?
Liquidity level?
Yeah, but
just a low.
As I told, after taking the liquidity, it needs a resting place. So where is your resting place? Below that sell side liquidity, where is it? That is too far. Remember you talked about this? It's too far from the weekly chart.
Yeah.
Okay, so you're thinking
this is unfinished business here, so it can come down to here.
That is the breakaway gap. It can be open.
Or this one here. This is our entry gap. So we can come down, take all this liquidity, and then Wednesday go back up. That would make sense.
Okay, so you think like that. Okay, perfect. Let's go to the hourly chart.
So thinking down to here and then up. So Monday, Tuesday down to here. Wednesday up. Hourly.
Hourly chart. What do you think about the hourly chart?
Okay, so hourly chart, we have closed above this fair value gap, came back to retest it. There's a bullish
fair value gap,
bullish hourly here and a bearish, so it's broken above the bearish. There's a funny situation for me, I don't know. Think about that. So it broke through the bearish one and now it's coming back for the bullish, right? This has never been totally filled either, this gap from last week.
Yeah,
Friday.
the opening gap.
Yeah. So it's never been completely filled, which is sort of strange. So I'm thinking this will probably fail on Monday, Tuesday, and we're going to come down here to either this, the last fair value gap on the hourly, or there's another one here.
It has
either one
50%.
of these. Yeah. Oh, it has traded 50%. So it'll come to the low of that and tap to the high, either to the low of this fair value gap or to the high of this one, because this has already traded the 50%.
Okay.
Would that be correct? Yeah, so something like if this fails, then we're going down to here, in my opinion.
Okay. Then it will go higher or lower. We'll see that later.
Yeah.
Perfect. Perfect. Okay. So can you please go to the 15-minute chart?
Okay.
What do you think from the 15-minute chart?
15-minute chart. Okay, so we've broken through this bullish. This bullish fair value gap's been broken. We can call this an order block, which has been traded. How much did it trade? Not even the 50%, which means it can potentially be quite bearish, yeah. Or is that only with fair value gaps? But whatever. So it's traded the order block after taking liquidity, but we still have that other there's no liquidity up here. So I'm thinking, yeah. And we've also inversed this one here. Okay, which is proper inverse because it came down, tapped to it, took more liquidity here. Yep. So this is a proper inverse, a T2 inverse. So this could potentially come up now to here, tap it into this fair value gap, or re-tap to this inverse, and then down. So basically it's down, yeah.
No, it's not down. Actually, you're thinking that you're making that plan. From your weekly chart, you have planned something, and from your lower time frame, you are planning something else. If you get confused with your higher time frame and lower time frame, what you will do, you will wait. You will wait for the price action, what it wants to do. You will keep observing them until you feel confident that your bias is right, or you have to change your bias. Okay?
Okay. Yeah.
You have anything to say here anymore?
No, please.
Okay, so I will share my chart and I will start from the beginning. Now you will just see where I'm thinking, what I am thinking over there. Okay?
Okay. See how badly I'm wrong.
No, man. I mean, just don't think like that way. I mean, we all are just trying to predict it. But can you see my screen?
How do I do that?
Oh, I think you have to close your stream first. Stop streaming.
Oh, okay.
Now, can you see my screen or not?
Yes, I can.
Okay, perfect. So here it is the calendar. So you can see the calendar, right?
Yep.
Okay, perfect.
Yep.
So let me start from the beginning. So this is the next week calendar, which is Forex Factory. We have only the medium impact news and the red impact news. In Monday, around 8:30 a.m., we have a medium impact news. I really don't care about that. But around 9:45, we have PMI. PMI is one of the most strongest news out of the news we can see. This is the most, one of the most important news, the PMI. So in Monday, I'm not allowed to trade until 9:45. After 9:45, I'll start to take my decision to trade. As we have the PMI news in Monday, I believe that it's going to be highly volatile. I'm not thinking about the expansion. I'm not thinking about the consolidation or anything. All I know that I will get huge volatility in Monday as we have this PMI news around 9:45. Then in Tuesday, we have core retail sales, which is also important, around 8:30 a.m. Not going to trade this market because it's not PMI, PPI or the CPI. If it is PMI, PPI or CPI around 8:30 a.m., I'm gonna trade from 8:30 a.m. But if it is other news like core retail sales or something else, I will wait until 9:30 and then I'll try to take my decision from Tuesday price action. Still, I think that it's gonna be volatile as well. In Wednesday, around the morning session, we have some red impact news. I really don't care about them, but around 2 p.m. we have FOMC. So this is my whole intention to see the most profitable area for this week is gonna be this area. This 2 p.m. 2:30 p.m. 2 p.m. should be the fake run. 2:30 p.m. should be the real move. So from 2:31 or 2:34, something around that area, I will try to find the best runner around this week. In the meantime, as we have the FOMC around the PM session, I will expect that in the morning session, market will make the liquidity for that FOMC. If and only if there is no earning news after the closing. So there is some kind of Nvidia or Amazon earning news after 4 p.m. So if there is no earning news, then I will expect that 2:30 p.m. run will be the best run toward my liquidity. Which liquidity is going to be made by the morning session, or if it left some liquidity by the Tuesday price action, whatever the liquidity will be left, I will target them by 2:30 p.m. run. In Thursday, we have final GDP, unemployment claims, and to be honest, it's little what to say, I mean, difficult to trade, but as it is around 8:30 a.m. and I'm gonna trade around 9:30, so I really don't care. I will see how the market is going to trade around this 8:30 a.m. Is it going to leave some liquidity, or it has taken some liquidity now going for another liquidity or not? Everything we'll see over there, and then we'll start to trade after 9:30 by depending our weekly analysis. I didn't do the weekly analysis yet. I'll go for that. In Friday, something like CPI, but not the core CPI. Okay, it's like PCE, something like that. But either way, it will be volatile as well. So in my opinion, after seeing this calendar, I believe that this whole week, every single day is an opportunity to trade. So this is the best week. It should be the best week. In the meantime, remember 16th December, 17th December, what did I talk about them? From 17th December or around 17th December to until the first week of February is the low probable area to trade, because this is the last area where market is going to close the yearly candle and going to open the new year candle. Okay, so this is the area which is absolutely the low probability depending on that yearly basis. So make sure that you are not over trading. You should go slowly. I mean, some certain entry you should take, for example 1 or 2, maximum 2. If they are losing, stop trading over there, because this is going to be the lowest probable area to trade for the year. Okay, it can be little different this year because we had some US election. That's why the whole year price action was dumped. So it can be beautiful right now. I don't know, we'll see. Okay, just keep that in your mind. From around 17th December to 1st of February next year, this is the low probable area to trade. I think we can go for the chart now. Outlander, you are with me, right?
Yeah, I'm here.
Okay. So over here, this is the US dollar index weekly chart. Here, this is the monthly entry fair value gap, and there is the monthly last fair value gap. I am not going to the monthly chart, but this is that monthly entry fair value gap. So far, market has traded that monthly entry fair value gap, then fall. This is the monthly fair value gap as well. These two blue line, that is also the monthly fair value gap. From the weekly chart, I have this obvious liquidity here, this high and that high. They are the obvious liquidity. This high has taken over here by a shallow run. That's why I just marked the top of that high as my buy side liquidity. I have this sell side liquidity. Below the sell side liquidity, I have this fair value gap. So far, this is that weekly bearish fair value gap. After trading this gap, which is the entry gap, market made the order block here. Now you can say this is the order block. I am not going with them. Instead, I'm going with that one because that is much more cleaner comparing with these two candles. So I'll go with this one, which is my weekly bearish order block. Here, this is that weekly bearish fair value gap from the weekly chart. Market has traded 1 time, 2 time. You can see both of this time market has traded the low. I prefer to trade the fair value gap in a way: constant crosswind rejection, low rejection, or top rejection. Low rejection, then it should reject from the constant crosswind. At least if it is overzealous, it can reject from the top. So depending on that that logic, as I have seen, market has already traded the low of this gap. I'm expecting that market will trade at least to that 50% of that gap. But as you told, Outlander, this is that highest up close body close candle which has taken all of this liquidity, which is a perfect order block. If this order block hold the price, then I will expect that market will fall for this sell side, this gap, which I'm not interested right now to think that this is gonna stop the price. I was thinking it when this candle appeared. So last week, not the last week, before the last week, I was expecting market will fall for this gap because this candle had traded the open of that order block. I was pretty much confident that market will fall for this gap, at least for this gap. If it doesn't go for here, here is some other gap as well. But this time, or the last week when this candle appeared over there and closed strongly over here, I'm believing that this is gonna be broken. Market is going to take that buy side liquidity and it is going to trade the 50% at least for that bearish gap, or to the low or open of that real order block which is unfinished yet. So market can reach until that area. It is also possible, I'm thinking like that way. If and only if this candle hold the price and market started to fall, then I'll change my bias for dollar index and I'll start to look for this gap, and then finally this liquidity, this gap, and over here I have a lot of liquidity as well. It's a long-term thing. Right now I'm just not thinking like that. Right now in a short-term basis, I'm observing this candle. Can it hold it, or is it going through that and market is reaching for that constant crossband? I wanna see it will reach for this constant crossband by taking this obvious liquidity. Is that clear, Outlander?
Yeah, I think that's good how you said that candle was a strong close on the weekly.
Absolutely.
Like it closed above the previous week, right? Properly. It didn't just sweep.
Yeah. So over here, this is the daily chart for dollar index. This is that buy side liquidity. Above that buy side liquidity, as you can see here, is the daily gap. Now, this is not the last fair value gap, but this is also a fair value gap which is important, which is called the entry gap. In that specifically, the last gap over here. I'm not worrying about them as well. All I care about this gap right now, because this dollar index, I don't need something very precise. All I can see, this high has been taken over here. The same liquidity from the weekly chart, it is much more cleaner over here. Market is random so far around this area. It's random because it has been rejected from that area. I don't see anything over here from the daily chart. So I believe that even if it wants to fall, it should fall from this gap, which is from the daily chart, the daily last gap. Last week I was observing this gap. Can it hold the price and send it lower? It perfectly hold the price, send it lower until this bullish gap. It was perfectly precise over there. After reaching over here, I wanted to see some kind of reaction until that relatively equal highs. So after clearing those relatively equal highs, I was observing this highest up close body close candle, which is my order block. Can it hold the price and send it lower again? Go through this fair value gap, falling for this gap at least here from the daily chart, which is the last gap, or whatever is the last gap. Until this area, can it reach over here? What happened? Market, this candle has taken that buy side liquidity, then it should start to fall. It didn't fall. What else it has done? It started to go higher, closed very strongly over there. Fortunately or unfortunately, it is respecting the opening of that daily bearish fair value gap. That is the opening of the daily bearish fair value gap. I want to see it will be broken, that daily bearish fair value gap, and it will take that buy side liquidity and then reach for this daily gap. If it started to hold the price, I will start to think about this obvious liquidity first. I mean, this low has been taken over here, so this low is the obvious liquidity. It will go for that liquidity, then it will go through this gap, it will reach for this fair value gap. I am little confused about this. I really don't want to see this thing is going to happen, but it can happen as well. In the meantime, all I wanted to see, market will, it can fall little more over here before reaching fall. I mean, before falling, it can reach until the 50% of that order block, something like that. In Monday, it can do something like this. Then Tuesday, by using Tuesday, it will fall little bit. Wednesday, it will go higher. That is my intention to see right now. Wanna see it will work with this down close body close candle, which is not a perfect order block, which is not a perfect propulsion block as well, because this should be the order block and this should be the propulsion block. It has closed below the 50% of that order block. So I'm not thinking this is a perfect something, but still this is a kind of breaker block as well, low, high, low, low. I don't need any kind of precision over here. All I need to see, it should not break all of this area. All of this area should not be broken by the lower run. If it holds this, I will expect market will reach for that daily last fair value gap, and after taking that buy side liquidity. If I'm wrong, then market will fall for this and we'll change our decision depending on the price action later. So this is all from the daily chart. Any confusion, brother? Or any question?
No, clear.
Everything's clear?
No, perfect.
So when I say that, I will wait for that. That means I have the time. I know that the most probable area to trade is FOMC. So until FOMC, I have the chance to trade in, to wait in Monday and Tuesday. Though I know that how it is going to trade over there. I will explain them when I will be in NASDAQ chart.
Yep.
Let's go to the 4-hour chart. So this is the 4-hour chart. This is that opening gap, and this is that opening gap. Market perfectly take that liquidity, trade that fair value gap or everything, traded that, went through this gap, opening gap, little violated, come back again, tap to the opening gap, perfectly went higher, take those liquidity. After trading those liquidity, as I was expected, it will trade this fair value gap. It has been traded that fair value, it's not fair value gap, the opening gap. This candle open and this candle close. This is that opening gap. So if you actually would love to mark it, it should mark it like this way. This is that opening gap. Trade the 50% of that opening gap perfectly over here. After trading that opening gap, can it fall? I don't think so that it will fall. But before falling, as I showed you from the daily chart, that it can go little higher one more time, then can fall little bit until this down close body close candle series over here. Any of the area, it can fall until this area. If we have some kind of trend line liquidity here, trade this any of this fair value gap or the order block from hourly chart, or sorry, 4-hour chart, then it can start to go higher. I wanna see it will go through this gap and use this gap as a support to take that buy side liquidity from 4-hour chart. So from daily chart and the 4-hour chart, I'm going to go some confliction over here. So from the daily chart, I want to see it will trade some middle of that order block, then it will fall for this area, around this area. It doesn't need to do that, but I will look for, I will just consider, or I will just let him fall until this down close series candle, any of this down close series candle, then it will go higher. But from 4-hour chart, I should be very obsessive over here, though it can give me some kind of reaction from that 50% of that opening gap. That gap can send the price lower to take those liquidity before going higher. I don't want to see that. I want to see it will keep going through this gap without any kind of reaction. If it happens, I'll start to think about this buy side liquidity and this area. In the meantime, if it doesn't do that, I'll observe the 50% of that week. Can it retrace or reverse from that 50% of that week, which is here? Can it reverse from there? That is my only intention, to see. If it keep falling,
but even then, it shouldn't really be a full reversal from there. It can send it. It's a reaction, right, from the week, because it's not a resting place. Correct?
Absolutely. And yeah, in this type of situation, while I'm seeing that, market should keep going higher. I mean, there is no need to keep falling, but that week, I mean, that 50% can provide me some kind of reaction, and I'm all about this liquidity over here. Can it take that liquidity before going higher? I want to see this is gonna be taken by this week or maybe by the next week. That's all I want to see. If it started to fall, then we'll change our decision, as I told from the weekly chart, from the daily chart, how I'm going to change it. From the hourly chart, all you can see is that same liquidity from the 4-hour chart. You see this trend line liquidity from hourly chart. As you can see, this is the relatively equal lows over here. Market perfectly reached until this area to all of this buy side liquidity. All of this buy side liquidity has been taken over here, except that high and that high. It has made the relatively equal highs over there. So let me actually mark it, which is a new buy side liquidity, a clean buy side liquidity over here. I want to see this buy side liquidity will be taken. Now, how it is going to be taken? If it go for that liquidity first, then I will expect some kind of lower run. If it fall first, that is the best case of scenario, to think that this buy side liquidity is going to be taken. Then it will reach until this 50%. Then this buy side liquidity, finally this gap. From hourly chart, it seems like that it's a huge range. But think about the whole week and think about those news. When we have those news, it's gonna be the volatile, and it will be, too fast market. I believe that it's gonna be too fast market. When it will fall, I wanna see this gap, which is the balanced price range. One single candle close here, and one single candle pass through that sell side liquidity. So there is something. If it trade to the top or to the constant encroachment, if it is not broken by body, the 50%, or to the top, if it is not broken by the body, I'll be extremely bullish for that buy side liquidity. Market has made the recent buy side liquidity. I'll be extremely bullish for that buy side liquidity. Then I'll look for the body close around this liquidity. If there is a fair value gap with a body close, I'll start to think until this 50% level. Or if market actually respect this gap, take that liquidity by a shallow run or maybe just by a body close, then the body started to come back again to this gap, I'll start to look for this sell side liquidity, this relatively equal lows that market is going to take those buy side liquidity. So if it happens like this way, I'll think about those sell side liquidity. If it go through this and make a fair value gap over there, I'll start, this is going to be my first target, then this buy side liquidity second target, finally this daily bearish fair value gap low, that's going to be my third target. Overall, I'm bullish for dollar index. I'm not thinking that market is going to fall for a long. I want to see it will be it should keep going higher at least until this gap, but all is going to depend on this volume balance, how this volume balance is going to stop the price. If the volume balance from the dollar index hold the price, then it is possible that market will take that sell side liquidity and it will go for more sell side liquidity here, which is also kind of shallow run from the 4-hour chart. For 1-hour chart, it's perfectly actually closed. So I don't think so that it has any interest to fall. I want to see it will keep going higher. That is all I want to see from the dollar index. Now, Outlander, it can be little contradictory with you and me. I'm just trying to show you the way I think the market and what is the reason for thinking over here. It doesn't mean you're wrong, I'm right, or I'm wrong, you're right. We both will do our.
No, I like your thinking. It makes more sense than mine.
Yeah. So just try to compare. Okay?
Analyze.
Yeah. Just
exactly.
Focus over here how we are going to do this.
Yep.
So let's go to the NASDAQ. Just a second. Okay. So from NASDAQ chart, market is extremely bullish. So I can't say that I am looking for sell. So I should keep looking for buy because it is at the all-time high. When you are at the all-time high, you should keep looking for buy until it proves you wrong. When it will prove you wrong, when market will make this type of bearish gap, see this bearish gap and never trade this gap. When market, even if it trades the gap, it should trade the 50%, lower 50% of that gap. If it happens over here, I'll start to think about this sell side liquidity, which is also the obvious liquidity. This low has taken over here by a shallow run in this contract, but in previous contract, it even didn't take that. So either way, it's the liquidity where is my most intention from the long term. But before falling, before reaching here, all I need a bearish gap, something like that type of gap. Then I'll start to think about the long term bearishness. Until then, I should keep looking for buy. There is no other way I can change my intention. I should keep looking for buy. That doesn't mean I'm looking for buy, so market will give me only the bullish candle. See this bearish candle, that bearish candle, that indecisive candle or lower run. I'm also expecting those type of things. Over here, as you can see, this candle has traded this fair value gap from volume balance to volume balance. This is the fair value gap, which is the weekly bullish fair value gap. After the market structure shift, market has taken the liquidity, market structure shift, price trade this weekly bullish fair value gap. This is the lowest down close body close candle which has traded this weekly bullish fair value gap. This down close candle has traded this order block. So this is the propulsion block. Last week, my intention was market will fall at least until this propulsion block, which is from the weekly chart, at least until that propulsion block, then it will go higher. It failed to touch that propulsion block. That is in my mind, and I'm really curious to know why it didn't trade that propulsion block. Why is that? So when it didn't trade that propulsion block, at the same time it has made a fair value gap over here. Now my intention is this should be the unfilled gap. I want to see this is gonna be unfilled. Why is that?
Even though it didn't trade the propulsion block.
Yeah, I don't need to think about this should be traded. I want to say this is now gonna be unfilled fair value gap. Unfilled fair value gap means this candle can trade this gap one more time but it should be left some portion of this gap open. So it is possible that it will come here and trade that propulsion block, but it will leave some portion of this gap open. That is my intention to see. Now, is it going higher or is it going fall? As I asked you when you did the weekly chart, you have to predict. I'm predicting that this is going to be bullish. Now, there is a contradictory with dollar index. From dollar index, I'm expecting market will go higher. So how can I say that this is going to be higher run as well? I'm bound to think like that way. It's going to be the higher run because I'm at the all-time high. So here is no price action. I am bound. I'm blind here. I should keep looking for buy. From the weekly candle, I am expecting it's gonna be a bull candle. So some kind of this type of candle. It doesn't mean it can't reach for this gap, then it will go higher and make a bull candle. It doesn't mean that. All I'm expecting it's gonna be a bull candle from the weekly chart. Do you understand?
Yep, understand.
Is market going to trade this one or not? We'll see that when it will be in the lower time frame. So this is the daily chart. And let me actually change the things over here. Just a second. So over here, this is that minus 2.5 standard deviation, minus 1.5 standard deviation. This open to that high. So let me actually show you here to here. This is that standard deviation. We have marked it long time ago. This is that minus 2.5, minus 1.5. That was the 50%. So let me actually mark one line over there because I just removed it from my chart. Now going to remove this thing. I predicted that market will reach for this minus 2.5 standard deviation at least until that level. It reached until this minus 1.5 standard deviation, break through that minus 1.5 standard deviation. How it broken that minus 1.5? Reached until that 50% of that range, minus 1.5, minus 2.5. I told that it is the best area to give me some kind of reaction. It has provided that reaction until this bullish fair value gap. At the same time, my intention was to see can this minus 1.5 standard deviation hold the price, send it higher, can close above this line. It trade this minus 1.5 standard deviation perfectly, respect over there with that bullish fair value gap from the daily chart, closed above that minus 2 point standard deviation or the 50%. Come back again, trade that down close body close candle. If you see there the consecutive order block, trade that order block, reached until a certain level, minus 2.5 standard deviation. Now when market actually reach until a certain standard deviation, I always respect those levels to find out some kind of reaction. If this minus 2.5 standard deviation can provide me some kind of reaction, I will expect that this market will come back again here. Have this daily last fair value gap from the daily chart and the entry fair value gap. I'm not interested to see this last daily fair value gap is gonna be broken. So from the daily chart, I wanna see this wanna be unfilled. Okay. Now, if market reach until this to the top of this unfilled gap, that means still the weekly unfilled gap is gonna be unfilled. Do you understand? Because you see this is overlapped over here, so I don't need this gap anymore. I'm gonna remove it from my chart. From the daily chart, I wanna see it's gonna be unfilled from the daily chart. At the same time, it has reached until this minus 2.5 standard deviation. Now it can be long-term bearishness, long-term for this sell certificate. It is also possible. All I need to see a bearish gap, something like this type of gap. If I find this type of gap, I'll start to think about the long-term selling opportunity. Until then, I should keep looking for buy. Remember that. Even if it fall a little bit, I can't change my bias. I should keep looking for buy. All I want to see if by Monday and Tuesday, if it can make a bearish gap over here. If it can do that, then by FOMC, I will start to think that fair value gap will be traded and market will fall for this unfilled fair value gap at least until this line. And then if it go through this, we'll start to think about long-term bearishness. Until then, I'll keep looking for buy. So Monday, Tuesday, I should keep looking for buy. Though I'm expecting dollar index will go higher, but I have to look for buy. All I care about the reaction from that minus 2.5 standard deviation. If it can react from there, it can fall little bit. and then I will see how the minus 1.5 standard deviation is going to work. If it is broken, I'll think this is reaching for this unfilled area. As you can see, I don't have buy side liquidity, I don't have sell side liquidity. I have nothing from the daily chart. So I'm 50-50 over here. I'm not interested to see that market will keep going higher. I'm not interested to see that market will keep falling without a bearish gap. So I have to wait for a bearish gap for thinking about sell. I should keep looking for buy. When dollar index will show me some kind of bearishness, I'll be confident to take buy. If dollar index is showing me that it is bullish as well, I'll be low probable. I will go with the low probable buy. No sell is valid for me. But I'm also thinking that market can fall a little bit. From the daily chart, nothing. It is not clear. If it is not clear, I'm not interested to push the button. I'll go to the weekly chart one more time, and I'm gonna mark that line, that candle. So this is that weekly candle, and if I just make it minus 0.2, I don't know. Okay, so let me make it 50%. How to do it? I guess it's from just a second. Okay.
No problem.
Okay. So it should be minus not 1, 0.2, 0.3. Why the 3 is over there? Okay, it's minus. It should not be minus. Okay, so 3. So this is the TGIF in Friday. If market close in between these 2 points, 0.2, 0.3, around this area, if it close around this area, then there can be the expansion in Monday. As we have the PMI in Monday, there can be an expansion because market has completed the TGIF in Friday. As you can see, market reached until this area, closed in between 0.2%, 0.3% until this area. When market has closed around this area, there can be the expansion in Monday as well. So I'm also careful about that. This is the hourly chart, and from the hourly chart, I'm going to remove this thing. Market reached for the all-time high, and this is that minus 2.5 standard deviation. How beautifully market has respected that line. Fall dramatically. This is that new day opening gap over here. Hourly bullish fair-value gap, constant cosmet rejection, top rejection. I told that if it should give me some kind of reaction. It has provided me that reaction until this order block. Perfectly traded that order block. Don't want to see that this order block is gonna be violated. Wanna see it will go through this bearish gap over here. If it work with the upper portion of this gap, nobody closed below this gap, then I should keep thinking about the all-time high. If it can go through this gap, I'll start to think about these lows will be taken, this whole hourly fair value gap will be traded. It will reach at least until this last fair value gap, and after reaching for this last fair value gap, we'll think about much more lower run, though I don't want to see that, but at least until this area, I'll start to think about the fall. Remember, if I would love to go for a sell, I have to wait for a daily bearish fair value gap. Until then, every sell is low probability. So even if I'm looking for that, I'm not interested to go for the sell. I'm only interested to go for the buy. If market keep going higher, I'll be confident to take the buy. In the meantime, if dollar index provide with a bearish reaction from that bearish order block, if everything is in line, I'll be confident to trade. If they're not in line, that is low probability, I'll try 1 or 2 times. If it doesn't work, I'll close my trade or close my chart or something like that. In the meantime, I'll observe this gap on. Can it go through this gap the way you saw the same gap. Remember, you marked both of this gap. In my opinion, this gap doesn't have any value as I have that order block over here. So all I care about that bullish gap. If it failed to hold the price, I'm looking for the low of this hourly gap, at least to the low. And then finally this gap and all over this area, if it can reach for those area, because you can see this low and that low, they are the relatively equal lows. Can it take those liquidity or not? It's a long-term thinking. And for that thinking, I need a bearish gap. Otherwise, I'm not interested to look for sell. I'm only interested to look for buy. This is the 15-minute chart. And from 15-minute chart, if you see, this was the last opportunity to go for the standard deviation from the 15-minute chart. That was the minus 2.5 standard deviation from 15-minute chart. This from the daily chart, minus 2.5 standard deviation from 15-minute chart. That was the minus 2.5 standard deviation. Market perfectly reached to that area, fall dramatically, reached until this area. Now there is another opportunity. So let me actually remove this one. High, low, higher, high. This is the lowest. This is the last breaker block opportunity. So I will mark that breaker block and I will go for the middle leg. Okay. So high, low, higher, high. This is the middle leg. If I'm not wrong here. So as you can see, market went through this minus 2.5 standard deviation. I would love to go week to week because market went through this standard deviation. So if I go to week, my most important line is minus 1 standard deviation, which is over here around this area, and minus 2 standard deviation, which is over here around this area. So I'll just mark a line over here around this area, minus 2 standard deviation. I'm going to remove this line over here. This whole opening gap or the new day opening gap has been rejected from the consonant crossment. I don't like to see something that much precise. Consonant crossment rejection should provide me at least to the top rejection or to the bottom rejection of that specific gap or the volume balance or the new day opening gap, whatever it is. So I want to see this market will keep falling. It will keep falling. It will keep falling until this minus 2 standard deviation. The wick will trade the new day opening gap low. Then we will see if it can go through this, and that is the opening gap from, I guess, Wednesday. It's from Wednesday. Can it work with that Wednesday opening gap or not? So that is all my intention to see right now from a very lower time frame. Again, remember, buying is the most easy or convenient area to take. Selling is much more difficult to observe. Selling is much more difficult to observe. If you want to take the sell, every analysis I'm doing because of that selling. I want to take sell, but if I want to take sell, all I care about the dollar index. Can it go through that order block? If dollar index show me the precision that it is going for that buy side liquidity and the daily last fair look at, all of this sell will be valid. If the dollar index hold that price by that order block, only buying is possible. If it keep falling, I'll let them go. I'm not gonna touch that market. So I'll let them fall. Instead, I will keep waiting for the buying opportunity. Okay, brother?
Okay, perfect.
Okay, so that was all about,
really,
yeah, that's all about the thinking about the price action for the next week. I hope it will help you and all the other people as well. So thank you guys for being over here, and yeah, we'll meet in Monday. And now I'll talk to Outlander actually, so I'm gonna close the recording. See you again. See you guys. Bye bye.
Thanks, teacher.